Watching Newsfeed AM, let's pick up on the markets now, and local trade continuing to be upbeat this morning after the rebound yesterday. The JSE rising the most since November on Tuesday, with the rand firmer as dovish comments from the Federal Reserve officials boosted sentiment. Let's speak now to independent markets analyst about how the JSE is shaping up this morning. Jimmy, good morning to you, sir. Let's kick off the conversation with that quick overview of how the markets are faring in early trade.
Morning, Tolly. Morning to our viewers. The JSE, although we did start off slightly positively, we have dipped into a bit of negative space. We're down about 0.5% on the top 40, on the all share, on resources, about 2/3% down on financials. But as you rightly mentioned, we are seeing strength in our currency, with the rand crucially below 19 rand. We're sitting at about 18 rand 94 against the dollar there. We're about 23.27 against the pound, and about 20 rand 10 cents against the euro, gaining about 0.5% against all three majors. So that's very positive for the rand. Obviously, the global or the geopolitical risks and sentiments around the world at the moment are giving rise to some tensions in the markets, and we're seeing that evident in the oil price as well. Oil price ticking up quite ever so slightly at about $88, up about 0.5% at this stage. Gold price as well ticking up slightly, sitting at $1,863 an ounce, up about 0.1% there. But we're also seeing that platinum and palladium pricing, that's up more than 1% or more than 1.5% in each case there. So interesting to see how the commodities at this stage seem to be rallying off the back of the global tensions that we're seeing. Overnight, the U.S. markets were in the green, with the NASDAQ and S&P up about 0.5%, and that filtered through to Asian markets as well, with Tokyo up about 2/3%, Hong Kong up about 1.5%, Sydney up about 0.75%. So we should hopefully see an uptick in the JSE throughout the rest of the day. I suppose it depends on how the markets are then going to read overall sentiment where it relates to emerging markets. We know we've got Brazilian CPI data set to come out today. That's set to tick higher. We've had German CPI data come out lower than the previous reading and in line with the expectations. And we know that we've got a couple of data points out of China around their finances or their loans at this stage. That should be coming out within the next half an hour or so. So it will be an interesting day on the markets for emerging markets with everything going on.
Let's quickly launch into company news, Jimmy. Credit ratings agency GCR Ratings reaffirming Northern Platinum's national scale, and this is long-term and short-term credit ratings. Talk us through those sentiments. What exactly are they saying?
Yeah, so if you remember, the PGM counters have been under a lot of pressure of late with the lower PGM prices, and that sort of put a bit of pressure on margins and on sort of debt profiles for companies. This ratings affirmation, basically, the long and short of it is Northern has a good liquidity profile. They are sort of better positioned than some of the bigger PGM players in the space to weather something like a more sustained down period on the platinum pricing and on PGM pricing in general. Some of their larger peers may find it a bit difficult due to capital and debt levels and that sort of thing. So Northern has very low debt levels at this stage. They've managed their business quite well, and they're set to survive the situation a little better if it persists longer. We know that the commodity space is very fluid, with pricing sort of adjusting quite quickly and quite rapidly in response to demand. But for now, this ratings affirmation is very positive for Northern, and it's basically just affirming that the company is in a good financial and liquid position to weather any downwards moves or significant downward moves in the platinum pricing at this stage.
Let's talk about the liquidators of Steinhoff International. The understanding is that they have set a liquidation date, and that is for this Friday, after which the company will be delisted and its shares will cease to exist. End of an era here?
Absolutely. End of an era. I mean, we've been dealing with this since 2017. We've been speaking about it since 2017. And if you think back to what this actually means in terms of significance. Steinhoff as a company at its peak is a share that was sitting at about just under 100 Rand a share, with market cap of just around 360 billion Rand at that time. And that's basically been eroded down to nothing. It's delisting. There's still that ongoing situation with the former CEO, Marcus Jooste, that the tribunal has upheld some decisions in that respect. But the reality is, for shareholders, for investors, this is the end of an era. A lot of people have a lot of money invested in this organization. Companies as well, if you think about corporate or sort of institutional investors, right through to the PIC as well, were involved in this company at one stage or another. And so this is definitely the end of an era. I think from 2017, we didn't think we'd get back to this point. The company recently was about 10 billion euros in debt, and the management team was aiming to save that and restructure that and avoid liquidation in that respect. It seems as though that's not happening, and part of the extension that they've been granted, so the Steinhoff debt at the moment has been given sort of a 3-year window or 3-year relief period on that debt, provided that delisting takes place and that the economic side of the business be handed over to the creditors. So those conditions look to all be finalized by Friday or so. And this is a sad case, but one of those that we in the financial world and as investors all learn from. I think the last sort of case that had such a significant impact, some of the standout cases we can think of are things like the Enron scandal. There's been a number of cases over the last couple of years where you take away a lot from learning experiences, but also it sends a very clear message from the financial standpoint that the importance of financial documents, or the importance of financial statements, and the accuracy of those financial statements.
Yeah, and it absolutely stands out, this company, as being one of the biggest fraud scandals we have seen, at least in South Africa. Let's conclude the conversation, Jimmy, with luxury goods bellwether. That's LVMH, reporting a 9% rise in third quarter revenue. It would seem customers are still buying what they like, even in these dim economic times. Do you agree?
Those that can afford to are still doing so. Absolutely. I think the LVMH numbers are a testament to, yes, they are slightly lower than expected, slightly lower than what we had forecast, but they're still a testament to the fact that there is still spend in the luxury space. We know that LVMH is the first of the 3 big luxury brands to report. We know on the 24th, later this month, we're going to get reports out of Hermes and Kering as well. So we'll see how those brands are performing as compared to LVMH. But yes, the sales side of the luxury goods, that seems to be intact. The revenues seem to be going up there. It looks as though the wine and spirits division of the business is where some of the pain is being felt. It looks as though champagne drinkers are slowing down the amount of champagne they're consuming, possibly in anticipation of Christmas celebrations. But at this stage, for the last quarter, there's a 14% decline in revenues on the wine and spirits divisions, but there's a 9% increase in revenues on the luxury labels such as Louis Vuitton and Dior and the like. So interesting to see how that's playing out. We know that during the pandemic, these luxury brands saw significant increases, significant outperformance over that 3-year period. And so for the slowdown to happen now seems, one, only natural, but two, a very clear testament that economic conditions aren't what they used to be. Interest rates are higher. Consumers are sort of reconsidering at least where they spend their luxury spend. And it looks as though things like Chinese demand are still having a bit of an impact on the market at this stage. So Europe and US recoveries and sales are still in order, and that looks to be sort of evening out. But the uncertainty and the unevenness of Chinese demand and Chinese recovery is very different from what we saw in the pandemic. But all in all, LVMH still in good stead. luxury brands are still likely to remain stronger and more stable at this stage. There's still going to always be that demand for them, whether it's slightly muted demand or excessive demand. I don't know if we'll get back to pandemic level demands anytime soon with the elevated interest rate levels, but only time will tell.
Yeah, indeed. Independent markets analyst Jimmy Moyaha, thank you very much for that markets update.